Hello everyone, welcome back to my channel, Crypto Update. If you're new here, make sure to subscribe as well as click on the thumbs up button and leave a comment below. On Monday, May 19th, Bitcoin blew up to $107,000 over the weekend and then dropped to $102,000, a 4% intraday correction. Traders were caught off guard, and derivatives platforms saw massive forced liquidations. According to CoinGlass, $650 million in crypto positions were liquidated in the last 24 hours. Market cap across all crypto assets dropped 3% to $3 trillion. The price above the prior weekly high of $105,000 was met with a wall of sell orders and a shooting star candle, a pattern that often means exhaustion at the top. Structurally, Bitcoin is still in a broad ascending channel, but a series of lower highs means momentum is weakening. Excessive leverage, market volatility and massive profit-taking led to a wave of liquidations. This trend may reflect broader market sentiment and could impact trading strategies moving forward. Bitcoin liquidation maps help track whale moves, predict price swings and stay safe from forced liquidations in volatile crypto markets. Understanding a Bitcoin liquidation map is imperative in dealing with the inherent volatility of the crypto market. The visual tool showcases probable liquidation levels, indicating where large orders may cause cascading price changes. In cryptocurrency trading, liquidation happens when an exchange forcefully closes a trader's leveraged position due to insufficient margin to pay losses. This usually occurs when the market moves sharply against the position. Long liquidations occur when prices fall, affecting traders who bet on an uptrend. Short liquidations happen when prices unexpectedly rise, impacting those who bet on a decline. In crypto, a single liquidation cascade can wipe out millions in minutes, triggered not by hacking but by traders using too much leverage at the wrong time. A Bitcoin liquidation map is a visual heat map indicating price levels where large liquidations are expected to occur. These maps assist traders in identifying zones where leveraged positions may be closed forcibly if prices fluctuate sharply. Each column on the graphic illustrates a liquidation cluster's relative significance compared to other clusters. The chart demonstrates how the market will respond if the price reaches certain thresholds. Taller liquidation bars indicate a higher potential impact. The various hues are solely for visual clarity, allowing users to distinguish between distinct liquidation zones. Crypto liquidations often follow the herd. When too many traders place similar bets, liquidation maps light up and whales use them as price targets. A Bitcoin liquidation map provides insights into probable price movements and risk zones by visually representing places where leveraged positions will likely be closed. Ripple, the leading provider of digital asset infrastructure for financial institutions, today announced 2 new customers in the UAE utilizing Ripple payments. Ripple Payments employs blockchain, digital assets, and a global network of payout partners to deliver fast, transparent, reliable cross-border payments and on-off ramps for banks, crypto companies, and fintechs worldwide. Ripple has established partnerships with Zand Bank and Mamo who will utilize Ripple's blockchain-enabled cross-border payment solution. This functionality, paired with the new license, enables Ripple to manage payments end-to-end on behalf of its customers, moving funds across the globe, and settling payments in a matter of minutes, reducing time and friction, and making the movement of value in and out of the UAE dramatically more efficient. Ripple is seeing increasing demand for its payment solution across the Middle East from both crypto-native firms and traditional financial institutions. According to Ripple's 2025 New Value Report, 64% of Middle East and Africa finance leaders see faster payments and settlement times as the biggest impetus for incorporating blockchain-based currencies into their cross-border payments flows. Ripple's simple, secure, compliant digital asset infrastructure means it is well positioned to provide the core services that financial institutions need to tokenize, store, exchange and move digital assets. Ripple Payments has near global coverage with 90-plus payout markets representing more than 90% coverage of the daily FX markets, processing more than $70 billion in volume. A federal judge on Thursday rejected a proposed settlement that sought to reduce Ripple's $125 million penalty. The Chicago Mercantile Exchange Group, the world's leading derivatives marketplace, is expected to launch XRP futures and micro XRP futures contracts on Monday, May 19, aiming to expand its suite of regulated crypto derivatives to include the fourth largest digital asset by market capitalization. The contracts will be available for trading on CME Globex and cleared through CME Clearport, with access, for after-hours participants, as noted in CME's notice. Each XRP futures contract will represent 50,000 XRP, while the micro XRP futures will represent 2,500 XRP. Fees vary by participant type and venue. CME Group confirmed in April that it plans to launch its first XRP futures contracts. The upcoming rollout comes as efforts to settle the SEC's long-running case against Ripple, the company behind XRP, stall in court. The decision keeps Ripple's legal challenges alive and casts uncertainty over the timeline for spot XRP ETF approvals, which remain under SEC review. Still, the introduction of CME Ripple futures gives institutional investors regulated exposure to XRP price movements at a time when interest in crypto derivatives is growing. Last month, Coinbase announced the listing of XRP futures contracts, including standard XRP futures and nano XRP futures, on its regulated derivatives exchange. This is all for today. Thank you for watching.